Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing regarding Nifty, Bank Nifty, what we expect from here on, as well as the key levels for both the indices. We'll also be discussing on the key sectors and stocks in focus in trade today, as well as the next few trading sessions. First up, let's briefly have an outlook at what happened in the US markets in trade yesterday. The US markets witnessed an extremely sharp correction in trade on the back of disappointing earning news. So we had the tech heavy Nasdaq, which showed a particularly steep correction. It tumbled by nearly 3.6% and slipped below its 50-day EMA level. The S&P 500 also plunged by 2.3% and the Dow was lower by 1.3%. If we see specifically for the S&P 500, it has slipped below its 50-day EMA level for the first time after 55 trading sessions. Going ahead, any sustainable move below the levels of 5,400 would lead to further selling pressure in the index up to the levels of 5,340 followed by 5,280 levels. Coming to Brent oil, so if you see, Brent oil has ended on a negative note for the fifth consecutive trading session. Going ahead, any sustainable move below the levels of 79.80 will lead to further selling pressure up to 78 followed by $76 a barrel. Coming to the dollar index, so if you see, the dollar index has failed to sustain above its 200-day EMA level for the second consecutive trading session and witnessed selling pressure. Going ahead, any sustainable move below the levels of 104.10 will lead to further correction in DXY up to the mark of 103.60. So now coming to the update regarding our markets in trade yesterday. So after a highly volatile trading session during the budget day, the benchmark index Nifty formed an NR4 pattern on Wednesday. It traded in a narrow range of 197 points, marking its smallest daily range in the past 4 trading sessions. Additionally, it formed a high wave-like candlestick pattern on the daily scale, indicating indecisiveness at the current juncture. These patterns suggested reduced volatility and potential consolidation in the market. Hence, we recommend waiting for a breakout or a breakdown signals as the index has temporarily settled in a tight range. Going ahead, the zone of 24,200 will act as the immediate support for the index. If the index slips below the mark of 24,200, then the next support on the downside is seen closer towards 24,000. On the upside, if we see, the zone of 24,480, 24,530 will act as the immediate hurdle for the index. Any sustainable move above the levels of 24,530 would lead to an upside towards 24,640 followed by 24,730. So all these levels that we mentioned are on the spot basis. Now coming to the derivative data. So in trade yesterday, the July futures ended lower by 0.3% and the cumulative open interest of the current, next and far series has surged by nearly 9%. If we see the constituents of the index, that is Nifty 50, 12 stocks in trade have witnessed long built up. We have 5 stocks which witnessed a short covering rally, while 19 stocks have witnessed short build up and 14 stocks have witnessed long unwinding. Coming to the option chain data, that is for today's expiry. Today we have the monthly expiry for Nifty. So in trade today, at the current juncture, we see that 24,500 has significant call open interest followed by 24,600 strike, and on the put side, if we see, 24,400 has significant open interest followed by 24,300 strike. For the July monthly expiry, we have the PCR, that is the put call ratio, which is currently at 0.76 and the max pain is seen at 24,400 strike. Coming to the update regarding Bank Nifty. So Bank Nifty for the second consecutive trading session has underperformed the frontline indices. It has taken support near its 50 EMA level and witnessed a bit of a rebound of over 500 points in trade. On the daily scale, if we see, it has formed a bearish candle with a lower shadow. Going ahead, post negative results from Axis Bank, expect a negative start for Bank Nifty, and the zone of 51,000 50,900 will act as the immediate support for the index. If the index slips below 50,900, the next support is seen closer towards 50,450 on the downside. On the upside, if we see, the zone of 51,650 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,650 will lead to a pullback rally towards 52,200 levels. On the derivative front for Bank Nifty, so in trade yesterday, so the July futures dipped by nearly 1%, and the cumulative open interest of the current, next and far series has surged by over 12%. This indicates overall short built up in the index. Coming to the option chain data for Bank Nifty, so 51,500 strike has significant call open interest followed by 52,000 strike, and on the put side 51,000 has significant open interest followed by 50,500 strike. For the July monthly series, we have the put call ratio which is currently at 0.78. Coming to the key market indicators, so the volatility index India VIX ended lower for the second consecutive trading session yesterday. It has ended below level of 12 for the first time after 58 trading sessions. On the daily scale, if we see, it has given a rising channel breakdown. This indicates that the volatility could further decrease as the event, that is the main union budget, is behind us. Coming to the advanced decline ratio, in trade yesterday, the advanced decline ratio was tilted in favor of the advancing counters. Now coming to the key sectors in focus. So technically, if we see, Nifty FMCG, Nifty Pharma, Nifty Healthcare, Nifty Consumer Durables and Nifty IT are likely to outperform in the short term. These are generally the defensive sectors which are currently outperforming in the market. And in trade yesterday, if we see, Nifty Mid Cap 100 and Nifty Small Cap 100 outperform the frontline indices by a decent margin. Hence, we recommend to look for stock specific opportunities in these sectors. Now coming to the FII and DII data. So FIIs sold to the tune of 5,130 crores yesterday, while DIIs purchased nearly 3,137 crores. FII long short ratio for index futures is at 68.84 on a net basis, as they sold about 43,058 index futures. On the stock futures front, FIIs have sold to the tune of 49,010 contracts, while on the options front, FIIs purchased 1,77,321 call contracts and simultaneously purchased 1,96,266 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.